Alright, good evening all and welcome back to this channel. This is a new channel, the Intermediate Traders channel. This is where I come to analyze the market using the top-down analysis from the higher time frame down to the low time frame, which is the daily time frame, and most times, sometimes the 4-hour time frame. I go to this time frame to what I go there is to pick my entries after making my analysis from the bigger picture. And I don't just base on the fundamental or the technical aspect of trading. I combine both the fundamentals and the technicals because I'm a 60% fundamental trader and also let's say 40% technical trader. I use technicals as a gatekeeping process, unlike others or a few others that use it solely to base their decision making and to pick their entries and exits. Technicals I use as my gatekeeping process. Fundamentals tells me where the prices are going, what is moving the market, the liquidity is in there, the volatility, because we forex traders, volatility is our friend. When there is volatility, that's when we make money. When there is no volatility, the market goes on a range, and most times the market is choppy or it's just in a channel market. You buy, you getting stopped out, you sell, getting stopped out. So most of those things it tells you that there is no volatility in the pair you're trading or in the market in general. So back to this year 2025, we're back to a full year where we're expecting, anticipating for rate cuts, volatility in the market, because once Trump enters the White House, there tends to be kind of volatility. Different analysts have been saying all sort of things because he is of the opinion of rate cuts, tariff hikes, and what have you not. A good number of these things, with his tweets, a good number of these will contribute to volatilities in the market, because being the president of the United States of America, a known country in the world, where their currency is one of the highly traded assets in the world. So any of his tweets, traders are going back and forth to see what he's going to tweet next, what he's going to say, what the Federal Reserve is saying. Most of these things, a good number of them, these are what moves the markets, not necessarily the candlestick patterns, the chart patterns. Most times those things work at least 30% of the time. A good percentage of the market volatility comes from the fundamentals. What are the banks saying? What are the big money movers, the hedge funds? What are they saying? What is the president of the country saying? The bank, the central bank, the People's Bank of China, the European Central Bank, the American banks, all these things, the forecasts from these banks, the interest rates, what are the jobless claims saying, what are the housing systems saying, all these exogenous and endogenous drivers. These are what moves the market, not the candlestick patterns and what have you noticed that's not forex market. So what I do is I go from the monthly time frame, sometimes I go to the 3 months time frame, then I scale down to the daily time frame where I get my final entry. And this night I'm going to be talking more or analyzing the gold, which I'm going to start from the monthly. Well, let me start from the 3-month time frame. This is where I get to see the overall trend and a very small compressed picture that gives me the leverage to see more of what is going on. So as we can see, the pair is on a bullish trend, no doubt. It's still pointing up, although there could be a temporary bearish moment. Sorry, the pair is on a general bullish trend, although there could be a temporal bearish moment. This could signal, I can see a kind of doji candle stand forming on this 3 months time frame. So it's a very big time frame. I have to keep that into consideration. This is not like the 30 minutes or the 4 hours. This is a 3 months time frame. It's comprised of years. These are years of trading volume compressed into this smaller picture that you're seeing here. So if I go to my monthly time frame, this is where I mostly come here and map out my key levels where I want to be noticing. If price get to these levels, there is the way when price gets to these levels, if there is a break or a bounce, there are price levels where the liquidity comes in. This is where the orders are, the market tends to come to few orders, to pick in orders and head to either the positive or the negative direction. And one of these levels are, I can spot one, although price is no longer there, but I always factor them because it gives me a general guide. I'll just make them very thin enough so that if I go to the smaller time frame, it won't be too shouty. This is one. I'm just going to use 2 levels, and I can see the obvious resistance above this price. This is where, as we can see, price action came here, took some orders, and is now selling. Just like I said, from the 3 months time frame, I could see, what I can see is a kind of will I say a kind of relax or a kind of range in the markets. This is good, and gold happens to be one of those pairs that has a good volatility, and when you on the right side of this pair you smile, but if you find yourself on the wrong side of it, pretty much going to cry. So forex market is more of having a kind of strategy and systems that works for you, not because it works for a mentor or it worked for a friend. You just have to refine it to a way where it's going to work for you over time. You factor in your risk management, your psychology towards the trading market. Your P&L is what matters, not really your strategy or anything. If you're making progress, you have to know, you have to be truthful to yourself. You have to know, okay, what am I doing wrong? You journal, you see your journal, you check your entries. If you're doing things wrong, you have to know how to cut them to give you a better chance of productivity and profitability on the long run. So if I go to the weekly, this is where I'm going to, I can see a very minor support around this price level. This is our minor support. As we can see, price came here and bounced out of this level. So this is where, like I said, I'm done with the technical analysis. All I have to do is to wait for the fundamentals to come out. This is where I use the forex factory.com and the investment.com and some other market materials where I get the fundamentals from, like the commitment of traders. I use a lot of material to make sure that I'm in the right side of the market. These materials helps me to understand what are the banks saying, what are the big banks saying, what are the governments, the governmental bodies, the housing and the jobless claims. All these things are what tends to move the market, because we have these political instabilities, the elections, election cycles. All these things move the market. These things tend to bring volatility over time, not necessarily chart patterns. Chart patterns is just the collective ideas of traders. When you see chart patterns, these are collective market ideas of buyers and sellers. But what actually moves the market are the endogenous and the exogenous drivers. These are things you need to know. There are things when just like we know when Trump was when he became the president in his first time, most of his comment that he will make, you see stocks spiking up and currency pairs spiking up. You just place maybe 1 or 2 tweets and you see the markets going into some kind of range. So most of these things, just like we're expecting him to return to the White House with his tariff that is coming to tariff laws and trade wars that is likely going to happen. Analysts have been saying most of these things are what makes you know where to channel your energy. Are you going to be bullish on a particular pair, or are you going to be bearish? Then you have to wait for his tweets and his remarks and his comments, because most of those things are what brings volatility in the market. So just like I said, from the 3 months time frame, this gold is on a general bullish trend, like as we can see here. Is on a general bullish trend. This signifies a bullish trend, although price has come into a consolidation inside this range. Let me box it up. I always box it up to make sure I don't make mistakes, and this pretty much tells me okay, I'm not supposed to be trading now. I just have to wait for the boss to get cleared out. Pretty nice and neat. This tells me this is a weekly time frame. If I go to my daily, my entries are always, I use the daily candle as a confirmation for my entry criteria. If I'm to go bullish, I want to see a full bullish candle, a full bullish daily candle close, one or two above this level, above this price, then I can go bullish and target. This should be my general targets, because gold most times, a good number of times, fulfills a round number. Then to go bearish as well, I need to see a full one or two daily candle close below this level, telling me that okay, the pair is going bearish. And not just the fundamentals or the technicals, I have to see something that confirms to me that it's time to go bearish or it's time to go bullish. Just like as we can see, this is a choppy market. It's not even a ranging market. You don't know, it's not trading in below the resistance and the support. It is just a choppy market inside this range. If you're trading this market right now, you could maybe, I don't know, for scalpers or day traders, they know better, they have their own system, but my system is more of a swing and position trading. I hold trade for days, weeks and months. This is how I trade. I don't always open my laptops or check my MT5 every now and then. Once I place a trade, I identify my stop loss and I close my system and just give it some days then to come and check back. Just like I said, I need to see a daily candle close below this level, then I will target here. My overall target will be here. Then when I see maybe a retracement, then I can start closing in like 50% of my position to allow the rest run risk free. For now, this pair, which is gold, is on an overall ranging market for now. As we can see, the candle spikes inside this range box is pretty much not telling us any good information. It's not telling me to buy or sell. That's why I'm going to leave it. Today is 4th January 2025. I will leave it for the meantime until I see a significant movement in prices. Then I'll start buying or start selling this pair. This is pretty much how I go from the monthly time frame down to the daily. This is it's kind of an easy trend following strategy to trade the forex market. Though there are millions and billions of strategies out there, you all know what you like. You have to know the one that works for you. When you learn a particular strategy from someone, you have to backtest it and tweak it to your own liking and what suits your personality. Then you have to make sure it is making money for you on the long run, because the market is just a collective psychology of people making decisions. So we have to know where you belong. Are you on the winning side, or are you just chasing illusions? You're chasing the Lambos and everything. Those things are byproducts of being productive and being profitability. They are not the profession. The profession is your ability to get collective data, analyze, interpret them, and make decisions with them. That is what the forex market is all about. The Lambos and the vacation are your byproducts of putting in the work. They're your byproducts of saying, okay, I have given years, the required years in the forex market, and now it is time to reward myself. It's just like a reward. You can't have reward before work. You have to put in the work before the reward. We all have a bigger goal in the forex industry that brought us here, but at the long run we discover that it is more bigger than that. This is a profession, it's not a hobby that you just do when you feel like this is, you have to zone in on the forex market, on the industry, to actually make a good sum out of it. You have to see it as a career path. Me, I see it as a career path, I see it as a hobby, I see it as a profession. I don't see it as a hobby, sorry, I see it as a profession, as a career path, because it requires more than what we all think. We initially coming into the market, we think, oh, you're just going to come, you're very smart enough, and the market is going to tell you that you're here to make easy money. You're dead, because in the forex market is one of the hardest way to make easy money. Yes, you make money, you can make the thousands and the millions. Yes, it's possible, but it requires work for you to actually make them. So this is it on gold, and as we go on this new channel, I will be posting some other analysis on different pairs. The range, just like USD card, is still on my watch list. As you can see, it's still very much on a range. I'm monitoring it closely. I'll still make analysis on it. These are just my previous analysis and my drawings, markings, then putting my fundamentals in check. Just make sure to like, follow the channel, which is very important. When you follow us, you comment and tell us what you feel, ask questions, and I'll make sure I'm available to answer your questions. This is a new channel, support it and make sure you help subscribe and share. Thank you. Peace.